And as Ranga said, I am a wee bit envious. You know where I come from. Not only because you have such a beautiful and green campus, but because you keep beating us in the ratings. But having said that, it's wonderful to be here. And I'm going to use this opportunity to share a few thoughts about data and technology in the capital markets. And you might be surprised by the nature of my presentation, but it's a reflection of how I feel about it. And the very first slide is, this is how I feel about it. You know, every morning I wake up and I'm looking forward, sorry, it's the sari. Were never designed for women. No, don't worry. Okay. Perfect. So this is literally how I feel every morning about going to work. I'm all excited and it just feels like so much fun every single day. And the reason for that is very, very simple. Those two words, data and technology. You know, having spent 2 decades, more than 2 decades in the corporate sector, the two things that were always a constraint in any decision and in any plans going forward was, yeah, data nahi hai. Okay, we don't know how to take this decision. We don't have enough data. Now, when you're the regulator or in the government, you ask for it and you get it, right? It's as simple as that. So usually the data is available. If it is not, well, it will be. So it's just so magical to wake up and every morning and to know that you have literally at your fingertips as much data in as granular a detail as you need and as wide as you need, as deep as you need to assist you in everything that you do on a daily basis and to really use that to transform what you are doing. So it's just magical. The second thing, which is of course hugely enabling, is tech. Now, everyone's talking about tech, and to me, it's not just tech for the sake of tech. It's tech because of what it can do and the wonder of what it can do. And that is what is really captured in this little slide. And I will end with this slide as well after I've shared with you some of the stories of what we've been doing in SEBI in this area. So of course, first focusing on data and data analytics and what it can do. As you know, one of the things that SEBI worries about a lot is what is happening in the market, the misconduct in the market, front running, insider trading, etc. These are the things that make the headlines. Now, in the past, we had to depend on, some imported software, some black boxes, and, they tell you that, this is going to give you alerts, etc. And we found that it was just not working for us. And we decided about 4 years ago to start building this for ourselves ground up. Now, being a government organization, we had a lot of limitations. You cannot do lateral hiring. You have to, if you want to give a contract to anybody, you have to go through months and months of RFPs and L1s and all the rest of it. And it's just so difficult. But guess what? Given that we had all of those constraints, we just decided we're going to do this in-house. And we assembled a team of relatively young officers who put together the most amazing algorithms that I have seen ever across my 25 years of my career. So today, when we look at the data and we look at the algos and we look at the alerts, it's magical. Because you can look at the data and say, here's this guy, look at his trading pattern, that's insider trading. It's as simple as that. In fact, in one of the orders, in SEBI, we pass sort of like quasi-judicial orders. We actually embedded a QR code in there. And this was, quite radical for a legal order, which is quasi-judicial in nature. We embedded a QR. And why did we put it there? Because in that QR, when you scanned that QR, you saw a video clip, which was a clip which showed the delta positions of this particular individual across various scripts over time. And what it showed was that his normal trading behavior in the normal course was he was investing in half a dozen scripts, 1 dozen scripts with this much delta, coming along, chugging along quite systematically and predictably. And suddenly, just before the quarterly results of a particular company, zoom, his delta position in that particular stock shot up by orders of magnitude. And 2 days after the results, boop, back to the bottom. Next quarter, same thing, boop, boop. Now, you look at that film and you say, this is insider trading, boss. This cannot be anything else, right? So when you have the power of that data, and more importantly, you have the power of visualization. And I keep telling my colleagues in SEBI, never underestimate the power of the visualization. Because at the end of the day, the analysis is for you. But when you have to use that analysis to convince other people, your best friend is a good visualization. So we use data in our surveillance. This was an example I gave you of insider trading. We have similar algos for front running. You know what front running is, right? There is some mutual fund fellow or some broker who knows that a big trade is coming into the market, and he front runs that trade. Now, I was at a conference recently, which was hosted by ISCO, which is the association of all the securities regulators across the world. And when I was sharing, over the breakfast table with somebody that our algo is able to detect whether the front running is happening at the mutual fund or at the broker end, they said, no, how can you know that? And it's actually really simple. Because if the trades of the same mutual fund are being front run, it's obvious that the leak is at the mutual fund. If the trades of multiple mutual funds are being front run, it's obvious that the leak is at the broker end. Now, it's very, very simple, and this is not even, fancy big data stuff and all. It's just simple algos written by young people who just love their job. And with this, the kind of power that SEBI has been able to harness in order to identify misconduct in the market has been just amazing. Of course, we've had our setbacks because the regulation has not kept pace with technology. And we're now busy trying to fix the regulation because the regulation does not support what the technology now is able to do. But we think that we'll get there in a few months. So it's this richness of the data. It is what it can do for you. It is what it can do for the market. And it's just so much fun doing it. Apart from looking at data for surveillance point of view, we rely a lot in terms of data on in terms of filings from various entities, right? All listed entities have to do various filings with the stock exchanges so as to ensure that there is no information asymmetry, right? A market, the fundamental premise that a market is efficient is based on the premise that everybody has the same information and there is no information asymmetry. And I would like to recount an interesting example actually happened in the committee, which now Professor Ravi Anshuman will be chairing, where we were having this conversation with all the stakeholders, and we said, the following things now need to be reported in XBRL format. And there was huge resistance. And I didn't get it. And I said to them, but you're already reporting it. What is your problem? You just need to convert it into an XBRL file. We'll even give you a utility to convert it. So, problem kya hai? Until one of them said, up until now, we were filing PDFs. And we were so sure nobody is going to look at it and nobody is going to analyze it. Now you're asking us to report it in XBRL format. There will be 50 analysts who will look at it and another 50 who will report on it. And the media will pick it up every single quarter. So now we don't like it. Now, this is the power of data, right? And this is what, as I said, why we love our jobs in SEBI. Because with this, just this tweak, and one may argue it's just by stroke of a pen saying henceforth all filings will be in XBRL. You change the way that data is presented to the public and the way in which the corporate sector is expected to be responsible in terms of their reporting. So it's just wonderful. Go on to something called what we call SupTech. SEBI has been So they're very focused on using technology for supervision. What does that mean? It means that, for instance, if we had to do an inspection, right? Because all of you, trust that the system works, you trust that the regulator is supervising the entities that you're dealing with, whether it is a broker, whether it is a mutual fund, etc. So we have a duty to supervise and to inspect to make sure that everybody is following the rules. Now, in the past, historically, the kind of inspections that were done were really sort of Baba Adam type inspections, right? A team of auditors will show up, they'll do some sample check, there will be some manual, assessment, and there will be this huge fight between auditor and auditee on interpretation of the law. And 1.5 years later, you will get a report, and then there will be, some action you will take on that. So we figured, like, this is really not on, right? I mean, in this day and age, we cannot be living in this century and doing this Baba Adam style inspection. So what did we do? So again, an example from the mutual fund industry. We started to collect the data from all the mutual funds. We have about 44 of them, so not such a challenge. So remember, if you don't have the data, ask for it, you get it, right? So we're good, we're lucky. The data started coming, and we developed, and we told the industry that we are going to develop the following 80 algorithms. And here is the logic for those algorithms. This is our interpretation of our laws. The algo manifests our law. Many of my colleagues were quite upset. They said, "Madam, why are you telling them? Now they will, clean up their act." I said, but that's the whole objective, right? So the objective of the regulator is not to catch people doing bad things. The objective of the regulator is to prevent people doing bad things. So we declared that we are now going to make these 80 algos. Here is the logic. And if you know what's good for you, go out and build these algos yourselves and figure out what we are going to find 3 months down the line and go and fix it. And indeed, that is what happened. So today, the way that the inspections are happening in mutual funds. So literally, it could be on a daily basis, but we choose to do it on a quarterly basis because we want to give industry the time to find their own mistakes first and fix them instead of showing up every day. So we collect daily data, but we run it every 3 months. And when we do that run, at the end, each mutual fund, each of the 44 funds, gets an Excel sheet. Each Excel sheet has multiple tabs relating to various regulations of ours. If you open the tab, it will tell you on such and such date, you did such and such transaction, which was violative of such and such section of our regulation. And this is the penalty amount for it. 100% audit of every single regulation, every single data point could be done daily. We choose to do it quarterly. Now, this is only the beginning because this is the, as my young team says, ma'am, this is the easy stuff. So what's the tough stuff? The tough stuff is where you have to try and find violations of the spirit of the law, not the letter of the law. So far, all of these 80 algos are all violations of the letter of the law. Your portfolio, single issuer exposure should not be more than 12%, single group exposure should not be 25%. This is all structured, it's really easy to do this. But the really fun stuff comes, how do you catch mis-selling? There's no formula to catch mis-selling of schemes. So if an 89-year-old person is being sold a 9-year fixed maturity plan, that's pretty obviously mis-selling, right? But life is not that simple, it's fairly complex. So how do you develop algorithms which are going to help us catch this violation of the spirit of the law and not just the letter of the law is what we are engaged with at the moment. And hopefully in a few months, we will have something to show for it. So SupTech also a lot of fun. We then come to the issue of technology. This was all about data and how we use it. Now about technology. What is our thinking? What is our approach when we look at what should SEBI do in this wonderful world where technology is everywhere and it's just available for us to harness its power? So one of the biggest things that a regulator worries about is risk, right? So the first thing we did in terms of changing the way the market adopts technology. The first one was about how we in SEBI adopted technology. This section is about how the market adopts technology. And as you can imagine, I have Mukta sitting here who will tell us that, organizational behavior and to bring change in any organization is really hard. But again, we guys are lucky, right? Because we're the regulator. We make a regulation, everybody has to follow it, whether they like it or not, right? So when we say that this has to be the new technology that has to be adopted, so what do we mean? So for instance, about a year and a bit ago, we implemented something which those who are traders in the market would now be familiar with. We introduced something called the pledge-repledge mechanism. What does that mean? It means that normally when an investor or a trader had to trade in the market, he had to post collateral with the exchange, right? It's margin. You have to post margin. This margin was usually placed with the broker. And the broker used to pool everybody's margins and give it to the exchange. Now, what we found was that, there are bad apples in every basket, and there were some brokers who were misusing client securities. How were they misusing it? Either they were taking the client securities collateral, and the fellow was not a regular trader, but the securities are in the control of the broker. So he was using it to pledge to an NBFC, taking a loan and giving it to his real estate company. Okay. The other kind of misuse of client securities is in SEBI, we used to call it the Peter-Paul problem. So Peter and Paul are both traders. Peter right now doesn't have a position. Paul has a position. Peter's collateral is being used for Paul's position. Now, if Paul defaults, Peter's securities will go. That's not on, right? You're saying, I didn't even trade. Peter's saying, I didn't even trade. But my securities are gone because the broker mechanism was such. So first there was a lot of debate. Let us inspect the brokers better. Let us get them to do better reporting. Yevo. Finally, SEBI said, look, this is not going to work. And now we have technology on our side. These processes are old, again, Baba Adam processes. In today's world, where is the need for pooling at all? So let the securities continue in the client's account. It continues to sit there. It is pledged in favor of the broker and then repledged in favor of the exchange. And should Paul, in this case, default, only his securities will be touched and Peter will not be impacted. And in any case, since the securities are not lying with the broker, there's no question of his, as I said, using that to get money and siphon it off. So this was a huge technology change in the entire market. Okay, it's never been done anywhere else in the world, ever. And we did it in India. So today, in terms of margin protection, protection of client securities, there is nobody better in the world than India. So this is the power of technology. This is what we can do in terms of risk management for the investors at large. The other big use of technology, of course, is in terms of cost reduction. Now, you may imagine, why does SEBI worry about cost reduction, right? That's a business issue. Let businesses worry about it. But we do worry. The reason being that one of our important agendas is financial inclusion. And having been sitting in a corporate entity, it's very clear to us that financial inclusion now, no matter how high a goal it may be, has to make economic sense for the corporate entity, right? They don't run for charity. They have quarterly results to deliver. So unless you bring down the cost, financial inclusion will not happen. And I think to that extent, at SEBI, we are quite delighted that we had introduced the concept of eKYC, which basically makes the cost of onboarding a new client very, very low. We had introduced it. It didn't really get that much traction until COVID happened. And now I think 92, 93% of all onboarding of clients is through eKYC, which means that costs have collapsed, and therefore businesses will just find it viable to go to tier 4 cities, tier 5 cities, even small clients, and ensure that there is more and more participation in the markets. Similarly, in terms of ease of doing business, this is again an important piece of our developmental role. And therefore, a lot of the work that we do in terms of process re-engineering is focused towards saying, how do we make it easier and easier for people to operate in the market? And for this, we have a number of advisory committees who guide us. Every segment of the market, they are the best and brightest minds in the country. They're very happy to be part of our committees. We have some very high decibel level meetings of those committees, and very, very valuable feedback comes to us through those committees. This is a slide that I want to talk about. You'll recognize what it is. It's just, simple data analytics. Don't even need more than, 10th standard math to understand this. But you'll be surprised at how even simple 10th standard math is now being used across the board in SEBI in everything that we do. I mean, I talked of surveillance and all of this, ease of doing business, risk management, etc. But even when we make policies, today, the way that the culture has been built in SEBI, and now, this is really, I would say, a call out to people who don't feel very comfortable with technology. Just imagine a sarkari daftar in SEBI like SEBI now. We don't breathe without data and without technology. So the future is all about that. So if you're not comfortable with it, you really need to make sure that you start getting comfortable with it, because it is the future, right? And as I said, sarkari daftar mein bhi ye haal hai, to baki to aap samajh hi sakte hain. So where do we use this? So in every policy decision that we take, we now do back testing. So if we were to implement this policy, what will happen? Who will scream and shout? Who will be impacted? And therefore, what do we need to do to mitigate that? If they're screaming and shouting because they're doing something wrong, then of course we will just ignore the screaming and shouting. In fact, tell them, yes, it's a jolly good thing you're screaming and shouting. But very often there are kosher reasons why somebody will be affected by a new policy. And therefore, giving people a glide path to comply, giving certain provisos in our regulations where certain kosher reasons for not being able to comply are provided for. All of this comes out from data analysis, which is very, very simple, 10 standard math kind of analysis. We use it extensively, and we use it to ensure that we understand who is going to be impacted by our regulations, and we understand it at a very granular level as to exactly which entity and for what reason is going to be impacted by what we are about to do. So policy making also has a huge requirement of data analytics now. And of course, as I said, the entire gamut of use of technology, sometimes we forget, because BPR used to be very exciting maybe a couple of decades ago, and people forget and they think, oh, this is now old stuff. It's actually not, because everything that technology is doing today is basically re-engineering processes to manage those three important things of risk reduction, cost reduction, and ease of doing business. So at the core, it's really about re-engineering processes, not in an incremental tinkering sort of way, but in a very radical, eliminate the root cause of issues kind of way. And that's what India is really using in terms of technology, and that's what makes us all so proud. And I would only say that every time that I'm in a meeting, with foreign FPIs, the investors, or with other regulators, the one thing that they all say to me is, you are so fortunate that you have in your country a culture of data and technology use, and that is what is going to make you so effective going forward. So it's a matter of great pride for us, and it's an exciting space for us. And for any of you who might be thinking of doing an internship or a young professionals program somewhere along your career, we are a fun place to work. We also have our not so fun things that we do, but this stuff is really fun. And I would certainly invite any and all of you who have an interest in doing that to come join the SEBI team and to make India proud. Jai Hind.
Thank you, ma'am, for a very informative lecture. Now we have about 10 minutes with us to take on few questions. You can raise your hands, please. We'll just pass the mics.
Thank you, ma'am. Very interesting talk. Just reflecting on one of the comments, which we cannot agree more, that the job is not to catch the crook, but to make sure that they're complying. But in terms of the recommendations that you made, is there a danger that by disclosing the practices, which I agree the objective, but does it raise the bar or change the gear so that as you also mentioned, that the objective is not just to follow the letter of the law, but also the spirit of the law? Does it make it more complicated? The crooks will do it in a more complicated way that are even a good position to catch them over the, do it internally, etc.
That's, you should be in SEBI. So it is very much the danger, and it actually happens, and people's modus operandi becomes smarter and smarter. So for instance, earlier people used to be foolish enough to do insider trading in their own name. Then they realized, oh, SEBI catches us. So then they started doing in their mother, father, etc. name. Then they realized, oh, common surname also SEBI catches. Then they started doing in mother-in-law's name because, no, see, I'm serious. I'm serious. Then they realized, oh, now SEBI is able to connect mother-in-law also. Then Behnois became very popular. I'm serious, Behnois, right? Because there's no way you can connect your sister's husband. Okay, so we were not able to do that. So then they figured, then we found that, okay, we can do through call data records. So, and see, when we pass an order, we have to justify how we've come to the conclusion that you've done something wrong. So then they realized, ye to call data records also these people look at. So if you spoke to your Behnoi, 50 times, then we know that, that's a problem. So then they moved to WhatsApp. Now WhatsApp is a problem. So then WhatsApp, then banishing WhatsApp. So now that's a problem. So the reality is that the regulators, unfortunately, will always be one step behind, but hopefully not too many steps behind. So yes, we need to get there, and the idea is to make it harder and harder and harder for people to do wrong things. But greed is human nature. So there is no market, there's no place on earth where greed does not have a part to play. So it's just that it manifests itself obviously in the markets. But then that's our job, and frankly, that's what keeps us young and makes us have a lot of fun. So we're good. We'll get there.
Thank you for a very fascinating talk on a topic that's quite inundating to quite a few people. My question to you is the following. We evaluate firms' performance by market shares, students' performance by their GPOs, faculty's performance by publications. How does a regulator evaluate its own performance? Is there a way that you think about your own performance?
Yeah. So, the whole challenge in this is that the best test of a regulator is what did not happen. So it's very, very hard to say that, we did a good job because A didn't happen, B didn't happen, C didn't happen. I'll give you a quick example. See, we've all worried about cybersecurity, right? And we all ensure that our exchanges and our depositories and all that, have a good disaster recovery plan in place. But we know that the standard archetypal disaster recovery plans account for location downtime, hardware breakdown, network breakdown. But nothing accounts for software breakdown or contamination. Now, in a cybersecurity attack, it's your software that will get attacked. So through the transmission, your DR site will also get contaminated. So we worry a lot about this. Now, what have we done about it? We've actually gotten our two biggest exchanges to have in place a mechanism, and this is work in progress now. I think we'll go live by about March of next year, where you're now mitigating against software risk. So all the data of every client's position and collateral, which is there on exchange A, is online, going and sitting in a storage box next to exchange B system in their data center. If exchange A goes down, and if SEBI determines that this is on account of software attack, meaning a cybersecurity attack, and it's not going to be possible for their DR site to come up in time, SEBI will press the button for that data to be uploaded into exchange B's system, their software. Okay? And now every participant in the market can operate on exchange B as though he was operating on exchange A. This has never been done anywhere in the world, and we will be the first to do this. Now, when we assess ourselves and, certain specialists, like for instance, as I referred to the ISCO thing, the global this thing, when they come do their assessments, etc., they will say this is fabulous, this is, wonderful, first in the world, etc. But will people at large know? No, because when that cyber attack happens, and it will happen one day, right? We all know that. And when this system kicks in, we would have prevented something. Nobody will see it as, oh, something happened. No, it didn't happen. And that is our, success. So in this context, I would say that becomes a very big challenge. But what we do try when we do our own assessment, and our board does our assessment, broadly, we look at three things. One is to say that we are responsible for, for regulation of the market. So is our regulation relatively up to date? Are we dealing with new modus operandi, and are we dynamic enough to deal with it? The second is enforcement, that are we passing the orders, getting the successes, etc., which we have to then modify. As I said, we've had some setbacks because the laws have not kept pace with our technology. So we now have to change that. So there are ways to do it, but I must say that it's very hard to quantify. And for a person who loves data, you can imagine that hurts me a lot. But maybe I should start documenting every wrong thing that didn't happen. Yeah, I think that's an interesting idea to do that. Thank you.
Thank you, ma'am, for this amazing talk. I think I enjoyed it quite a lot more than I thought I would. And no, I mean, honestly, like when you spoke about the data and you used technology, that was extremely nice. Ma'am, I was just wondering, like you said, you're using technology, like you're bringing it in to track certain trades, mutual funds, etc. I was just wondering, like, how does SEBI use the technology to track Ponzi schemes?
So this is a question not of technology, it's of the law. Ponzi schemes actually don't come under our jurisdiction. So there are 5 different pieces of regulation, and Ponzi schemes currently comes under something known as the BUDS Act, which is under the state governments. So it's not something that comes under our jurisdiction. If we become aware of something, because sometimes we get investor complaints, and then we redirect them to the relevant state government because they are covered out there. It's not our jurisdiction.
Thank you, ma'am, for a very interesting lecture. So you've spoken about how technology is being used by SEBI to prevent misconduct. But my question was around how do you think of the risks that technology itself brings? So I think one you've already talked about, which is cybersecurity. I had a couple of other kind of use cases in mind. So one is technology amplifies the power of certain individuals to influence markets. So Elon Musk might tweet something and it will change the share price, right? And this might be used for bad ends. Second is technology can also create inequalities. So we've had, algo funds and hedge funds in the US trying to shift their internet connections closer to the Wall Street servers. And I'm sure that's happening in Bombay also, to reduce the, lag times in their trades. This is a power that retail investors don't have. So this creates an asymmetry in, how fast their trades get executed. So how do you see SEBI's role evolving in to counter such kind of emerging threats?
So I think certainly SEBI has a role to play in this. And in respect of, what are now called finfluencers, right? There is a line that needs to be drawn. So for instance, supposing you are sitting at a dinner party and you are fairly conversant with the stock market and you give advice to your relatives, maybe there are 20 of them, gotten together. You give advice, you're also a finfluencer. You go online and you give that same advice and broadcast it free, so-called free. You're also a finfluencer. Now, the way that currently the regulation is that unless there is a contract, right? If you're simply saying something for free, it's freedom of speech. If somebody wants to listen, they listen. They don't want to listen, they don't want to listen. But if there is a contract between two people, that contract is something that a regulator can regulate. So without a contract, with your relatives, it's a social contract, but it's not a written contract. In the social media world, it is a different kind of social contract. So we have to draw a line, and therefore we have something called investment advisor regulation, research analyst regulation. So the minute there is a contract and a consideration, then it comes under our purview, and we take numerous steps to regulate that. You may have seen most recently that we put in place a regulation to say that any algorithms which people are promoting for retail investors, you cannot display past performance or any track record because you have not proven it to SEBI or to the exchanges that this is the past performance. Unlike a mutual fund who, when they display past performance, it is audited and proved, and there is disclosure to back up that performance. In the case of algos, there is no such thing. So we've told the industry that we are open. The day that you come up with a mechanism, and we are ready to support you, to do that, we are happy for you to do that. But until then, you cannot show any kind of performance. Now, if somebody on the basis of description wants to use your algo, most welcome. So we have to draw a line on that. Coming to the second point in terms of co-location, where retail investors don't have the benefit of co-location. First of all, that's not correct. So we ensured that these stock exchanges permit not just individuals to buy a rack at the co-located with their servers, but also to permit aggregators of demand to have a rack. So if 50,000 retail investors say that they want their trades to be co-located, then they can go to a demand aggregator and say, I want to do my trade from colo, and they can do it. So we ensured that that happened, that people, if they wanted, they could have access. But my question would be a little bit different, that colo and that nanosecond timing is used really for people who are doing high frequency trading. Now, is it the intention of a retail investor? Because he's hopefully a buy and hold for a reasonable period of time, and he's not playing the market, trading the market in nanoseconds. If he's playing the market in nanoseconds, he's not an investor, he's a trader, this must be his profession. Then he has various avenues, as I said, to also co-locate. But I do not believe that a retail investor who's buying a share today, buying Infosys today to hold, for the next 5 years, I don't think it's really a disadvantage for him. And in any case, if a person is in Bombay versus in Guwahati, that difference is also there. So for a retail investor, it shouldn't make much of a difference. But if you're a high frequency trader, you have the ability to come in.
Thank you, ma'am. Now we will take this opportunity to honor our chief guest with an IIM-B memento.